Welcome back to the channel. In today's video, I actually want to answer a question that came in from my Seeking Alpha account. For those of you who follow me, you know that I initially started writing a monthly portfolio update on Seeking Alpha, tracking my investments, expressing my investment philosophy. And so I have, maybe 700 and some subscribers or followers there. So let's start out there. And we're going to go here and let's reduce the screen a little. And we can just scroll down. There we go. Okay. Pietros, I was on Lemnos for a few days in January visiting friends. It's an enchanting place and it has a feeling of age. I enjoyed your poem. Just a quick little side here. For those of you who don't know, I went to the University of Miami, majored in English literature, minored in classical antiquity and art history, nothing to do with finance. I came to investing later in life through just an interest that I developed. So if you Google Pietros Maneos literature and such, you'll see some of my novel, my essays, my earlier poetry and such. So that's what he's referencing. I've watched a number, but not all of your YouTube videos. You have an interesting approach. I've got wealth in Texas and Florida keyed up, and that's a video that I did actually fairly recently. And just how you're seeing a lot of wealth fleeing from New York and California to Texas and Florida. And he goes on. I have a couple sets of questions. One set on the leverage ETFs, and I'll leave that for later. The question for today is, what, if anything, do you do if your indicators show bear market looming and maybe recession? So let's start on that. I actually am not a global macro guy. So I'm not one that, well, if the Fed boosts interest rates, then I'm going to go to cash. Or if I'm seeing indicators for a bear market, I'm going to go to cash, or I'm going to go to bonds. I have indicators, but much of these indicators, are geared towards businesses, not stocks. And so what does that mean? Warren Buffett and Charlie Munger have talked about this. They don't buy stocks, they buy businesses. And so I have a lot of different screens for the most part, but most of those are focused on identifying things that are super cheap in the market. And then I do my own research as to why they're cheap, and then deciding if I want to purchase or not. And then he goes on, he says, your composer rules are set, but on your manually managed assets, do you make adjustments in response to signals, maybe signals you're getting inside composer? Or do you keep those manually managed assets as a kind of buy and hold and just watch decline with stoicism? Well, that's a really good question. So on the manually managed assets outside of composer, a lot of those, excuse me, a lot of those are individual value stocks. And so if those are declining in certain instances, I'm generally going to purchase more if I feel that they're getting cheaper and cheaper. Now, I also hold just vanilla index funds, which are kind of buy and holds. And that, I believe, provides kind of an anchor or ballast to the portfolio. So, yeah, with the buy and hold, individual value oriented stocks, if the Fed raises interest rates, it's generally not going to affect my decision. If we're going into a bear market, I'm going to run screens as to see what's the cheapest sector, what's the cheapest individual companies, and why are they cheap. So I kind of watch the decline with stoicism, and I feel that that's a competitive advantage, because if you're an actively managed fund, mutual fund, hedge fund, you have bosses and boards and bureaucrats and clients to appease. And so I'll give you a perfect example of this. In March of 2020, I was buying cruise lines, I was buying airlines, I was buying hotels, and they were going, from the time that I purchased them, they would go down even more, and I would purchase more. If I weren't an independent investor, if I weren't someone who answered to no one, um, that may not have been possible. If I worked for a big hedge fund, I'd have to run that by a board of directors, or if I ran an endowment, I'd have to run that by other people. And, and I'm purchasing things that are down there 10, 20%. But if I'm investing for the long term, if I'm investing for in 2020 for what's going to be in 2023, 2024, there you go. So that's I killed it in that age, partly due to my own ideas, but I would even say more importantly, partly mainly due to my independence as an investor, of not being associated with a larger firm and bosses and so, as I mentioned. So right now I'm looking at some certain things as well. I'm not going to get into that in this video, but looking at some things that are really, really cheap, and I made some purchases there, kind of the same thing. So anyways, very, very short video today, but I will actually scroll over here and you can see, to that point of, seeing, having sort of a stoic mentality. And then there's a quotation I think he's referencing. He said, you talk a little bit about this in one of your videos, in the superpower of investing. Basically, the ability to deal with volatility is a superhuman power in investing. But we're going to go over here. This is just the TD Ameritrade account, and it just gives you a sense of the ability to deal with volatility. You can see today it's 566. You can see over the last year, like March of last year, March 2nd. So almost exactly a year ago, it's just kind of been sideways. And I've made additions to this account, but it just, honestly, what I'm doing here is just pushing that snowball further and further down the hill. Because every month, not every day, but every week, let's say, dividends are coming off, things are being reinvested. Those investments over the long term are going to compound, and there you go. So you can see I was at 562 right here, March 2nd of last year, and I'm at basically the same place now, 566. So just, yeah. And look, things could go, this account could go to 500, 450. It's not out of the realm at all. It peaked at, 670. So it's, down about 100,000 from its peak in, November, December of 2021. But there you have it. So anyways, listen, I appreciate the question coming in. I hope this is helpful, and keep the questions, comments coming. Take care, guys. Ciao.